Welcome to the IRS Solution Attorney Show. If you have problems with the IRS, don't focus on the negative, focus on the solutions. With the IRS Solution Attorney, Darrin T. Mish. For over 15 years, he's been helping taxpayers with IRS problems reclaim their lives and their financial stability. Now, here's your host of the IRS Solution Attorney Show, Darrin T. Mish.
Welcome and good morning to the IRS Solution Attorney Show. I am the IRS Solution Attorney, Darrin T. Mish.
And I'm your co-host, Katrina Madewell. Thanks for joining us this morning. Hope everyone's doing great after the Thanksgiving holiday.
Not only that, but this is the first time back live in several weeks, 3 weeks at least, right?
Yes, so, we've been pre-recorded and we aired some of those shows over the holiday break.
Some reruns, quite frankly. But it's pretty exciting, you know, that Thanksgiving happened. There was this little thing that happened, what was that, November 8th?
Yes, that was my birthday.
That's
not the answer you were looking for, was it?
Are you telling me you guys have not been here since then?
No, we've been here since then. Have we? Wait, maybe we haven't. Oh, yeah, I forgot. We have not.
No.
Election Day was like the last time we were here live, for your show anyway.
No, we weren't. Were we here on Election Day? Maybe we were. I don't remember. But anyway, we've not been here since the election. And so
Election Day was a Tuesday.
Okay, so that's a Tuesday.
Oh,
so,
no, we weren't.
So we weren't here. And
takes a long time for her to recover from her birthday celebration.
Or maybe from the results of the election. We'll never know.
I'm still celebrating. Today's only December 1st. I get a birth month, Pat.
And so today's topic of the show is going to be all about how the President-elect Donald J. Trump, and his tax plan will affect you and other ordinary Americans.
And since the show was entirely all Darrin's idea, I'm going to invite you to call in during the show at 888-404-1010, 888-404-1010. And Pat George has had this mischievous look on his face pretty much all morning since we've been here. So I expect him to say just about anything during the show as well.
So there's this natural predilection to always think that the grass is greener on the other side, right? So I think pretty much
That's
no matter
everything in life, isn't it?
Yeah, pretty much no matter what job you have, you always kind of eye this other job that you'd really rather have, or you think you'd really rather have. And I actually think I have it really pretty good. My life's pretty good. I don't have to work too many hours and whatnot, and I think I'm fairly compensated for my efforts. But I've always secretly wanted to be a political commentator, and I think that would be a lot of fun. And so that's I'm going to try and resist that urge today too much.
So Darrin's going to practice a little on the IRS Solution Attorney Show. Fun.
Well, I'm not going to.
It is kid radio, though. Like, who doesn't want to hear how the newest president-elect, you know, how that will affect your taxes?
Well, of course, because, you know, the president, I used to think this before President Obama, I used to think, well, how much can the president of the United States really impact my life? Now, he can impact the country, he can impact world affairs, there can be wars or not wars, you know, the world economy, that kind of thing. But how much can the president actually impact my life? And I never really experienced that until, quite frankly, Obamacare kicked in. And just in the past year.
Well, that affected everybody's life.
Right. And in the past year, my health care plan was actually canceled, a health care plan that I really liked, that I think I was promised that I could keep, and that I could keep my doctor, and my rate, you know, my rates would go down.
You could keep them, but the rates were probably just a lot higher.
And essentially what happened to my health care, my health insurance, was the premium was going to triple, and the deductible is going to go way up. And we solved that, and we don't have to talk about how we solved that. And it ended up being better in the long run, not because of Obamacare, but in spite of Obamacare.
I hate to say this, but unfortunately, I think it got voted in by people that didn't have insurance or couldn't get it, maybe something pre-existing. So I understand that, and it makes sense. But I think, unfortunately, a lot of people that voted for it and like voted for that president for that reason or whatever, I think the problem is it wasn't what they thought it was going to be.
Oh, of course not. I don't even think the Democrats would say that Obamacare turned out the way they wanted. The Democrats would always say, and I'm trying not to be too opinionated this morning, but Democrats would always say that it didn't go far enough. That's always what the left is going to say. But I wasn't really trying to engage in a long conversation about Obamacare, other than that was the first time I ever personally experienced the President of the United States impacted my life personally.
Which makes sense. Makes sense. A lot of times it's on a broader scale, and it doesn't so much trickle down that much, at least where it affects you monthly.
Right, exactly, or affects your pocketbook directly. So that was the impetus, or the reason that I came up with the show topic today, was because I think this radical new tax plan is going to affect you, ordinary American, in your day-to-day life. Probably, if this goes through, probably in a good way.
So what's the meat and the potatoes of it? Like, what's
Yes.
he trying to do? What's the idea behind it? Because I clearly do not read up on politics, perhaps as much as you have even on this topic.
Oh, do tell.
So basically, I think that Trump feels that too few Americans are working, and that too many U.S. jobs have been shipped overseas, and that too many middle-class families can't make ends meet.
I think I would agree with all of the above.
And I think he's been pretty vocal about that, and oftentimes quite inarticulate, or maybe just the guy's like a bull in a china shop. I mean, he just goes in there and he's just thrashing around, destroying stuff everywhere. But I think that
he's a little bit radical. If he could calm that down, he might do a lot of good.
Well, he actually became, somewhat more presidential, if you want to use that term, like in the month before the election. He calmed down.
Yes, he did.
And now he's back to like baiting flag burners and stuff. And it's really sort of an interesting cultural phenomenon in that he sends out a tweet. By the way, his bypassing of the media is absolutely brilliant.
I love Twitter. Like, I totally follow that.
So he sends out a tweet that says, I think that flag burners should lose their citizenship, by the way, which is impossible, and either lose their citizenship or go to jail for a year. Okay. And then I think he knew that would cause a bunch of radicals to go out and burn flags all across the country, which further sort of ignites his base in support of him, because I think most of America is actually somewhat offended by flag burning.
Well, think about it. Why do all typical, and I say this because I don't think we're typical media, but why do all typical media people do stuff like that? To get attention.
Absolutely. And the guy's just brilliant at it. I think it has to do with the fact that he's been on TV for, a decade or whatever in the show The Apprentice, which, by the way, I liked a lot. I thought there was a lot of really good business lessons in every single episode of that show. And I think he was really pretty fair. I never saw any favoritism towards any race or class or gender or anything. The guy just wants to make money. I mean, at least in the context of that show.
Considering the amount of debt our country owes, that's not a bad thing.
No, I think it's a great thing. And I think that this most recent iteration where he, helped save those 1,000 jobs at the Carrier air conditioning plant is really sort of interesting. I can't imagine President Obama trying to do that.
And what's surprising also is that he didn't win Indiana.
No. Trump did. Yeah, Trump won Indiana.
Did he?
Yeah, for sure.
I thought he did not.
Yeah, Mike Pence is actually the governor of Indiana.
Okay, I was watching that early, and I didn't.
It would be even more fascinating, like if these jobs were in Illinois or New York or California.
Well, I know right
like
now
that.
he's visiting all those swing states that helped him win. That's what he's doing right now. I did see that on the Twitter feed.
So basically, Donald Trump says he wants to accomplish 4 simple goals with his tax plan, and here they are. Number 1, tax relief for middle-class Americans. In order to achieve the American dream, let people keep more money in their pockets and increase after-tax wages. So far, I like that. I got to tell you.
I mean, who doesn't? That appeals to everybody.
I would think. The second one is simplify the tax code to reduce the headaches Americans face in preparing their taxes and let everyone keep more of their money.
Okay, this is a really good topic for you to chime in on, Darrin, because, simplify the tax code, that alone right there. Geez, you read this crap every day. The average person like me or Pat or anybody listening, we're like, yeah, this IRS crap is like, how thick is that book exactly?
In the next segment, we're going to actually deep dive into each one of these things and how he intends to accomplish these. And they're amazing. Some of these things actually really could hurt my business. And you know what? I hope they do, in the sense that our tax code is ridiculous. The reason that people need, help at my level, at my experience level and my education level and intelligence and all that stuff, is because the system's just too darn hard to navigate. It's not supposed to be like that. What's that?
It's jacked.
Yeah, it's not supposed to be like that. So number 3 is grow the American economy by discouraging corporate inversions, adding a huge number of new jobs, and making America globally competitive again. So corporate inversions are where, you have a carrier, for example, and they're going to go ahead and create a foreign subsidiary in Mexico in this example, and they're going to do all of their manufacturing for a certain product in Mexico, and basically that money is going to stay offshore because the way the American tax system is, if that money comes back, it gets taxed at the highest corporate tax rate in the world. Makes no sense.
But it happens to a lot of people, and there are a lot of jobs that are being moved outsourced. Even myself, I have a lot of staff here. Most of my staff is here, but I have 2 VAs in the Philippines.
Yeah, of course.
And they're amazing. Like, I would move them here. They're so good.
Yeah, I understand. But even more important is that we have, the middle America and the blue collar, which is the foundation of the middle class in this country. And the middle class is really the foundation of this country. And manufacturing historically has been really big in blue collar, in in the blue collar area of work. And manufacturing's leaving because it's cheaper to do everything in China. And for goodness sakes, they're going to ship.
It is.
They're going to ship chickens over to China, have them cleaned and processed, and then shipped back. And it's cheaper to do it that way.
All I know is Corona is way cheaper in Mexico than when you buy it here. That's all I know.
And of course, he's always right. Trump did win Indiana 57-37.
No,
That's why we listen to you.
Pat was Googling that up. So number 4, which is my favorite, I'll have to announce that one if you don't mind, Darrin. And that's that number 4 is he doesn't want to add to our debt and deficit, which are already just off the chain ridiculous.
So of those 4 points, I don't see how anyone could disagree with those things. Now, they may disagree that he can accomplish these things, and I'm somewhat skeptical myself. But those 4 points, I think, are rock solid.
If you want to talk about it, we're here to listen. 888-404-1010. Darrin Mish will be happy to debate this with you. 888-404-1010. Back in a minute. Welcome back. You are listening to the IRS Solution Attorney Show.
I'm the IRS Solution Attorney, and today, political commentary host.
That's Darrin Mish. I thought you were going to forget your name there for a second. And I'm Katrina Madewell, your co-host for the show. Pat George back there, always shaking it up, making it a great show for us.
And you're talking about all of the paupers. How are we going to be as far as taxing on us with the new plan?
Well, the topic of today's show is how Donald Trump's tax plan is going to change, the tax situation or the tax structure,
Don't worry about the paupers.
How it's going to impact the paupers, to use Pat George's terms. And this one might directly apply to you because
I don't doubt it.
The first one is...
Well, to recap what we talked about in the first segment, it was the tax relief for middle-class Americans, simplifying the tax code, growing America's economy by discouraging corporate inversion, and then not adding to the deficit. So we're going to go to each one of those. Yes.
And it's important to note that the debt and deficit are 2 different terms that mean different things. The debt is how much total debt does the country owe, which is, I think, we're at $20 trillion a year now.
It makes me want to throw up.
$20 trillion total now. But the deficit is how much are we short each year. And so, yeah, it's great to cut the deficit, but we haven't cut the debt like in decades.
It's all red.
It just continues to go up and up and up. But this first, the way he says he's going to accomplish his first goal, which was to lower taxes, basically, for middle-class Americans, is if you're single and earn less than $25,000, which doesn't apply to you, Pat, or if you're married
could if I could save a lot of taxes.
Or if you're married and jointly earn less than $50,000, you're not going to pay any income tax whatsoever. That's actually pretty huge.
Is that poverty, though, or is that still middle class? $50,000 a year, 2 people?
It's not. I think it's lower middle class, but
it's not going on vacation.
Yeah, it's not.
But I mean, that's not. If you think about the traditional American family, they've got 2 or 3 kids, and if you're living on $50,000 a year, that doesn't go very far.
Well, listen to this stat because it's amazing. That alone would remove nearly 75 million households from the tax rolls. That's an amazing statistic. I mean, that's households. That's not even 75 million people. That's a good number of people. And if you think about the inner cities and even poor suburban areas, there's probably lots and lots of families living on $50,000 or less. I think the median income is only around $50,000. So by definition, that's half.
That is middle
class. That would
class.
be half of the country.
So how do you? I guess I can't spit it out now. Go ahead.
Well,
basically, what they're saying is for these people who owe $50,000 or less as a married couple, there's going to be a 1-page form that you fill out with the IRS, and basically it's, hey, I don't know any tax, I win.
Right there.
But that's people making $50,000. How many people do you think are going to fudge making 60, 65 that are going to, well, all I need to do is get down to around 49 here, and I'm not going to have to pay anything.
And that, Pat George, is why I am going to stay in business.
I think they're going to make stuff stricter. Agreed. And so what I was thinking is, because if this is 75 million households, and he's going to completely abolish any income tax that they would pay, they have to make that up somewhere.
Well, there's a dirty little secret right now, and that is that there's a huge number of households in America who not only pay no income tax, but they get the earned income tax credit. So they earn so little money that not only do they not pay any federal income tax, but they get a tax refund of money they never paid, back every year. And it's usually somewhere between $1,000 and $3,000. And so that actually passed during one of my heroes, Ronald Reagan's administration. And it's turned into federal welfare. So I don't know. Trump hasn't said he's going to abolish that, but that could be one thing that gets abolished, which is not going to be terribly popular in the poorer areas, because right now there's this big rush in the inner cities and the, in the poorer areas in late January, early February to go file your tax returns. And it's not because they're, wanting to pay. It's because they're getting big refund checks.
That's true. And if you've ever stood in line outside of like a welfare office or something like that, or just seen that and heard some of the stories, because we interact with a lot of people, so we see a lot of things, and it's ridiculous. You see a lot of these middle class families that can't get help, which should be meant for short term help, not a way of life, and that's the problem.
That is a problem. I agree. And it's not fair to the people who are actually on the welfare, if you think about it, because welfare, not to get too political and not to be too controversial, but welfare, when it's designed as a way of life, is actually a trap. It's not a benefit. What you're doing is you're killing all ambition to better yourself as the recipient of the welfare, because good enough is good enough. And when I think about people who are actually suffering on welfare, if you want to use that term, they're suffering because they don't have any hope that their life is ever going to be better than living in the housing project with the subsidized housing, with the food stamps, with the WIC. And it's just not right. And those people need to be empowered to learn, to be educated so that they can have a better life.
I would agree with that 100%.
It's generational poverty, and it's not fair.
But it's a hand up. It's not a hand out. That's the problem.
Yeah, it's not fair to them because they've not ever been appropriately encouraged. And I'm sure there's people who are listening to me, and I'm probably making them so mad they're cross-eyed. Don't drive off the road. It's just one guy's opinion that it's generational poverty that's been institutionalized, and I don't think it's right. But the second way that Donald Trump is going to go ahead and implement his new tax plan, he says, is he's going to actually simplify the tax code and only have 4 tax brackets. And they're pretty low.
But that's fair. I mean, it's when you think about it, if you just basically, like, this is your tax bracket, if you make this much money, it is simple.
Yeah, right now there's 7 tax brackets, and he's going to reduce it down to 4. He's going to have 0%, which is what we just talked about, 10%, 20%, and 25%. I think the current highest tax bracket right now is 35, isn't it? 36%, something like that. And so it's going to take it down quite a bit. But he's also going to eliminate the marriage penalty and the alternative minimum tax, which is also called AMT. And that's going to give us, as a country, if this all works out, the lowest tax rate since before World War II. Now, why is that good? There's probably some people listening and they're thinking, well, only the rich people are going to benefit from this because they're not going to pay their fair share, which is a term I hate, by the way, because
they support the taxes.
Well,
for most of America,
I don't know what the exact stat is, but the richest, 1% pay something like 90% of the tax revenue that comes into the Treasury. And so, what is their fair share? Is their fair share a larger dollar amount, or is it a larger percentage amount? It's just not a term I'm comfortable with. To me, fairness means equality. And why should the person who works really hard and takes all kinds of risks and makes $1 million a year pay a higher percentage of that than the person who sits on the couch all day?
Yeah, because if they don't, or they lose their they're not getting any help or subsidy. I can tell you that.
Well, and small business in this country actually provides the vast majority of all jobs. So the small business owner who takes a risk, risks everything. I mean, I can't tell you how many times I've personally risked everything. Laid it on the table, rolled the dice. I've lost sometimes, but I've won more times. And that's why
entrepreneurship's about.
Exactly. And that's why there's people working for me at my office right now, and their kids are going to school and they have car payments and insurance and gas and all those things. It's because of the risks that I've taken as an entrepreneur. And I'm not trying to glorify myself. I'm just saying that we have to think about our society in the bigger picture, that small business owners really employ a lot of people through their grit and determination, through their late hours, for staying up at the library all night when they're in grad school or whatever. And that's the sacrifices that they made and the risks that they took.
And they have the student loans to repay that no one's helping them, or they had to do without a lot of stuff while they were making those student loan payments. So
yeah, I'm 49 years old. And when I got out of law school, I was 26, and I owed over $150,000 in student loans. And those weren't paid for 15 years. So if you think about it, for 15 years, there was financial decisions, or there's things that I could not do financially because I had these huge student loan payments. I had a lot of friends of mine who didn't go to law school, who just got bachelor's degrees, and they were living in big houses, driving fancy cars. And I was living in a little bitty house in a really kind of cruddy neighborhood, driving smaller cars and whatnot for a long time to help pay for those sacrifices, for those decisions that I had made. and I'm not, again, not asking for any sympathy, but it wasn't until I was probably 40 years old that my income started to, accelerate over where theirs were, and it sort of started to even out.
Yeah, and you graduated law school at 26, you said? So,
Right.
I mean, that's a substantial amount of time.
Right, whereas they were, getting out of college at 22, 23 and going right into the workforce, so they had a head start. So those are called opportunity costs, and we all have opportunity costs. So the decisions that we make, some of the decisions that we make lead to opportunities that we can't pursue because of the decisions that we made.
I know the point is like simplify the tax code too, but I think there should be more incentive for businesses that, in your example, want to hire like a young new lawyer or a young new doctor that you work for like a lower amount of time, but then they help knock out that student loan debt. There should be a lot more incentives like that for corporations that offer to do it. And it's a lot of opportunity. It's a good learning curve for newer.
Yeah, that's kind of a cool idea, and I don't know that the government should be involved in that, but I like where you're headed with that, where
If
corporations
they give a tax
credit
or something
exactly.
for it.
I like that idea quite a bit. When we come back, we can talk about some of the other couple ways that Donald Trump plans to achieve his goals to simplify the tax code and lower taxes for everyone.
We'll be back in a minute. 888-404-1010 if you want to chime in. We are live today in the studio, unlike the last couple of weeks over the holiday. 888-404-1010. We'll be back in a minute.
Are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darrin Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darrin Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves. So get Mish. 888-438-6474. Principal Office, Tampa.
Welcome back. I am the IRS Solution Attorney, Darrin Mish.
And I'm your co-host, Katrina Madewell. I think Darrin was waiting to see if I was going to talk first or if he was going to jump in for your welcome back.
So today we're talking about Donald J. Trump, the president-elect, and what his plans are to lower your taxes, and how it's going to impact you, and whether or not he can do it.
Man, if you missed this show, check it out in its entirety because it was a really good one. Even Pat George said that, it wasn't as boring as it normally is, talking about IRS, blah, 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 blah. I'm just saying. That's what he said during the break.
As a short recap, we were talking about what Donald Trump was going to do, or he says he's going to do to change the tax system. The first thing was he's going to provide tax relief to more of the middle class in America. He's going to simplify the tax code to reduce, just the burden in preparing your taxes and whatnot, which is one of the things that I think is really sort of unfair in the system. I mean, to be honest, we make quite a lot of money preparing tax returns, but it really shouldn't be this hard. And the tax code's just been added on to for something like 80 or 90 years, and that's why it's so darn complicated right now. The third thing he said he was going to do is grow the American economy by basically trying to keep American manufacturing jobs in America, and by encouraging corporations to bring their manufacturing back onshore. And lastly, he doesn't want to add any more money to our debt or deficit. Now, I don't think he's going to be able to do that, but I really like the idea.
That's the biggest task on the list.
And we need to start working on that. So in the last segment, we talked about the fact that if you're single and earn less than $25,000, you're not going to pay any tax at all. If you're married and jointly earn less than $50,000 in tax or in income, you're not going to pay any tax at all. And that he intends to simplify the tax code by eliminating some of the deductions or...
Wait, he's eliminating the deductions or just changing to 4 brackets?
No, yeah, I misspoke. We're not going to talk about the elimination of deductions at this point. He's eliminating the marriage penalty and the alternative minimum tax. The marriage penalty is sort of interesting.
I was going to say, I don't even know what the marriage penalty is.
The marriage penalty is this. It's bizarre. If you're married, you actually pay taxes at a higher rate than if you're single.
So are you telling me I should be filing separate from my husband? I'm just saying.
No,
or is it just if you're married, period?
It's just if you're married, period. If you filed separate from your husband, you would actually pay more in taxes.
Lovely. That's lovely.
So, yeah, you don't want to do that, I don't think. There are reasons why you might want to file separate that are kind of beyond the scope of what we're talking about here.
Is there any benefits to, for being single as opposed to being married as far as when you're filing?
Oh, yeah. You actually have a lower tax rate if you're single than if you're married. So remember we talked about the same-sex marriage and all that stuff. Don't you remember me chuckling and saying that they I'm not sure that they were quite understanding what they were asking for. You know, if you're married, you pay a higher tax rate. Not only that, if you're married and you don't want to be married anymore, you got to get divorced, right? So sort of interesting. If
what is that rate? From what to what?
That's what I was thinking.
It's a few points. It's a few percentage points. But
you
traditionally,
would think they would encourage it and make it less if you're married because you have more to spend in the economy if you have double income family.
Well, let's put this in perspective. Okay, so the tax code for decades has been used to engineer human behavior. So we tax something that we want to happen less, and if there's something that's happening too much, then we tax it more to try and discourage people from doing that thing. And a good example is the mortgage deduction, right?
Are you saying they don't want us to get married?
I don't know. It's bizarre. So the mortgage deduction is there because the government wants to encourage more home ownership because homeowners tend to keep their houses nicer, they're more stable, all these sort of stereotypes.
Which I'm a big advocate for that.
Of course.
I don't want it to go away.
Being in real estate, I'm sure you are. And so that's why the home mortgage deduction exists. But I'm not sure. It's only been in the last decade or two that the marriage penalty kind of ended up happening, and it's discouraging marriage. And you can see that all across the country. So anyway.
Well, the younger generation, I can certainly see how that would definitely have an impact on them as well.
For sure. So the third thing that Donald Trump said is he was going to try and discourage these corporate inversions where, companies are creating subsidiaries in foreign countries, sending those jobs overseas and keeping that money overseas. And the way he says he's going to accomplish that is no business of any size, from a Fortune 500 to a mom and pop shop to even just a guy doing freelance work, on the side, is ever going to have to pay more than 15% of their business income in taxes. And this lower tax rate makes corporate inversions unnecessary because America's tax rate will be one of the best in the world if that actually occurs. And I think that's really interesting. Now, let me explain why this is just not a giveaway to big business.
Well, his motto was "Make America Great Again," and I see this drawing a lot of people back in that really want to live here.
Yeah, a lot of times people will say, "Well, we should just tax the corporations." And I understand the sentiment. I get it. I understand why people say that. But what happens when you tax a corporation? Well, the cost of the good or service provided by that corporation necessarily goes up. That's how it works, people. You cannot tax a corporation more and not think that the prices for that good or service are going to go up. Because I was thinking about this on the way to work today. We have this other bizarre, part of the law that says that corporations are mandated by law to maximize profits to shareholders, particularly in public companies. So they have this competing structure, this competing problems where people say, well, let's tax them more. And the corporation's like, yeah, but the law says I have to maximize my profits. That means I have to raise my prices to account for these higher taxes.
That would be a conflicting tax code, would it not?
It would be. And that's one of the reasons why it needs to be simplified, because it's kind of crazy right now. But I believe that if you cut taxes to corporate taxes, more jobs will come back. I mean, Apple is already discussing bringing their manufacturing of iPhones, like the one I have here in my hand, back to California from China. And the estimate that I heard on the additional cost to build this thing in California, which is a high, expensive place for labor, instead of China, is like $20 a unit. Now,
That's all it's going to cost more?
Yeah. Would you pay $20 a unit so that people could build these things in California?
I think everybody would. Everybody would do it because there's American jobs behind it.
As long as a culture, both sides of the aisle, we get on board and we understand, no, this is patriotism. This is, taking care of our own, of our own people, of our country.
I agree with
scalable.
a lot of this.
It's scalable too, because you think about how much an iPhone is. That's the cost of a mini computer in your hand. So $20 in that perspective is scalable.
Maybe Samsung should have thought of about that before the Note.
Listen, don't even start. But that's like a whole debate in my office, the whole Apple versus Android. And I am not an iPhone user. I tried and it didn't work.
But I agree with a lot of this. But I think we should leave the fortune cookies still where they're supposed to be, because if they bring them back to Alabama, could you imagine the messages that'll be in those fortune cookies?
Well, I have an interesting story about fortune cookies. Fortune cookies are not actually were not even invented in China, and they don't even use them in China. Fortune cookies were invented in San Francisco and are
How do
are
you
made
know
in the
this
United States.
random, useless knowledge? Like, do you study retarded trivia?
He lived close to that.
I actually went to law school in San Francisco, and so there's a very, very
Okay.
large Chinese community there.
That makes sense.
And some of the best Chinese food, at least that I've had. I have not been to China, but Chinatown invented fortune cookies. So the last thing that Donald Trump says that he's going to do, I think is pretty interesting too. He says that no family will have to pay the death tax. He believes that if you earned it and saved that money for your family, that your family should get it, not the government. You already paid taxes on that estate, and you shouldn't have to pay double taxation. Now, right now, the death tax rate is, or the threshold is pretty high. I think it's a couple $1 million. And so that doesn't affect very many people. But again,
But think about the person that sacrificed a lot of stuff over the years to get to that amount of wealth.
And I think that the best argument there is that it's already been taxed. Why is it being taxed again?
Exactly.
Which is one of the problems that I have with the fact that if you're retired now and you get Social Security retirement benefits, if you earn over a certain amount of money, then your Social Security becomes taxable. And Bill Clinton did that. And I really think that's unfair because that was taxes that you already paid into the system. And so why would you pay tax on taxes that you already paid in and that was already, supposed to be a benefit for you? Doesn't make a lot of sense to me, and hopefully, Mr. Trump will figure out that that's unfair and should be done away with as well.
That is knucklehead thinking.
This discussion today has been awesome, but my only question in the whole outline is, going back to number 4, he wants to do stuff that doesn't add to our debt. It doesn't continue the deficit. Like, how is he going to do that with the things that we've talked about? Did you pull any info on that, or is that more homework for another day?
I think that's a really astute question. You're basically saying, okay, so we're going to lower taxes. How is that not going to add to the debt and deficit, right? Well, the theory is, and it's a theory that I would subscribe to, is that if you I think that this plan will massively spur economic activity, okay? I think our growth has been mired around 1% for 8 or 10 years now. And the Trump administration is saying they think they're going to get it up to like 4%. So that's a quadrupling of our growth. And so the theory would be that this would spur so much economic activity, people would be making so much more money, they'd be paying more taxes, and the government would benefit from that. And we saw that happen in the Reagan administration and George H.W. Bush's administration as well. We saw when times were good, more taxes were paid. Actually, in Bill Clinton's administration as well. You remember the dot-com bubble, right? Mm-hmm. And Clinton gets a lot of credit for having a really great economy during his administration. And he did have a great economy during his administration. And as you recall, the deficit started to go down. There started to be surplus. There were some surplus years as well. And that's because there was so much economic activity that the taxes started to, cut down on the spending.
And if you don't remember that or you can't relate to it, the same is true when the housing market collapsed. That sparked a global economic meltdown. And a lot of people still are not spending like they were before that time.
And I feel sorry there's a whole generation of young people, that are maybe in their 20s now that don't remember a better economy than we've had for the last 8 or 10 years.
Right.
They don't know any better. They were in grammar school or high school or whatever.
Well, we see millennials too, where their parents lost their house. And so they think homeownership is bad. Like they don't get it.
Boy, that's sad.
It is.
That's really sad. And I think that as a country, we can do better. And I'm not saying that Donald J. Trump is is the savior. There's a lot of things he does that just have me shake my head and scratch my head.
He got voted because he was different. People are tired of the same political BS. And he is different than everything else I've ever heard. And that's why he got elected. It certainly is not for his personality, because I don't think people like him in general as a person.
We were talking at the break about how, Trump won because he wasn't part of the establishment for either the left or the right. He's just this fresh guy who kind of speaks his mind, and what you see is what you get. We're also seeing that he's somewhat malleable. He's been changing his opinions, and that's a little bit scary, because we don't know exactly where he's coming from. But if this plan were implemented, I think that this plan could do, wonders for our economy and help a lot of people's lives.
So Pat George put up here on the break this usdebtclock.org. We're going to go ahead and push that on over to the IRS Solution Attorney Facebook page so you guys can have a quick look at it. It's like, I want to throw up looking at that.
$19,909 billion and counting. I'm looking here, and every couple seconds, another $500. Actually, it's a lot more than that. It's looks like maybe $25,000 or $30,000 a second.
We might even do a live stream for you guys and just throw it up there on the page so you can have a look as we get to the train wreck of the week next. It's going to be a little bit longer than normal, so we're going to come back with that after a few questions from our listeners. Is that fair enough, Darrin? Enough time to do that? Maybe one question. So tweet it or call it at Darrin_Mish another day, 888-GET-MISH. You can reach him directly. We will answer your questions on the air. We'll be back in a minute. Welcome back. You're listening to the IRS Solution Attorney Show with Mr. Darrin Mish,
The IRS Solution Attorney.
And if you missed the earlier part of the show, catch the whole thing on this podcast. What's the name of that thing now these days?
Well, the podcast will be called...
We changed the name, right?
The IRS Solution Attorney.
But you can search for Darrin Mish.
You can search for Darrin Mish, and it'll come up on iTunes. And we do have listeners out there to the podcast and on the app as well. So that's pretty exciting.
Great, interesting topic, like not so straight IRS, but there was a little part. We'll have to maybe add some more of that to another day, one of those topics that we talked about.
Well, as these things start to unravel, we'll certainly have loads and loads of show content, because as the formal plan actually is rolled out and starts to be voted on and maybe even approved, then we'll have more to talk about how these changes may impact you as just an ordinary person walking around wanting to pay less tax. I don't know that many people who want to pay more tax. I've spoken to people in my life who believe that taxes should be higher, but they never want them to be higher on themselves. They always want it to be higher for someone else.
Somebody else will pay it.
And this cuts across all economic lines, too. Sometimes I'll speak with people who think that they're the little guy and they're only earning $500,000 a year. And, the rich guy is always the guy that's earning more than you. So nobody really wants to pay more taxes when it boils down to it.
No, I don't think so.
And I would include myself in that.
Yeah, everybody, I think we speak for everybody when we talk about that. All right, so to answer at least one of the questions that we have, we'll go ahead and answer Matt's question. He wants to know, when does the 2017 tax season officially start?
Well, that's a pretty good question. Normally, it wouldn't be that good a question. I would say about around the middle of January. But this year, it's actually going to be delayed somewhat because the IRS is going through like these security issues with their computers and whatnot, and they're trying to cut down on some fraud. So I think the official first day is January 31st, but I think they're saying that refunds are going to be delayed well into February, and there's going to be some people who are not going to be very happy about that.
All right, let's squeeze Teresa's question in there, too. She wants to know, how will Donald Trump eradicating Obamacare affect our taxes? Is that a long answer?
Well, it is a long answer that I'm going to make short. I think that Donald Trump says that when they eliminate Obamacare, that they're going to put back they're going to encourage more use of health savings accounts. And it's something that I've used for years. Health savings accounts are really pretty neat because you use your pre-tax money to pay for your deductibles and whatnot when you go to the doctor. And one of the things that I like about it is it motivates us as consumers of health services to care what things cost. So if you ask a doctor what something costs, they usually have this deer in a headlight kind of look. They have to go check with the office manager. But there's a wide variety of costs for services, and this applies for prescription drugs as well. If you have a very expensive prescription medication that you take, it will pay, I guarantee you this, it will pay to shop that price around, because pharmacies, it might be $400 at one pharmacy and it might be $100 at another. So if your insurance is covering it, you don't really care. And why does that matter? Well, because that leads to an increase of cost of everything. If we don't care what things cost, the price is normally going to go up.
We've seen some wild stuff, really, with insurance as a whole anyway. But I think it's about that time, Pat, isn't it? I heard a little... Woo-woo! There's your train wreck of the week. Crash!
Okay, so we're having some computer difficulties today. I'm going to blame it all on Pat George personally. And oh, there it is.
So my train sound effects were okay.
It's about that time. It's the time for the IRS train wreck of the week. And this is the segment of the show where I talk about somebody who came in and they were a train wreck, and typically they have a happy ending. In this particular case, it's kind of a longer story that I'm going to try and make short, but a gentleman came into my office about 10 years ago, and he was involved in a business that had some unpaid payroll taxes, and it was a lot of money. It was approaching, $1 million. And it was interesting because he was not a shareholder of the business. He just worked there. He was just like a manager type person that worked there. And the owners, the shareholders, were actually relatives, but he was in charge of the day-to-day operations of the business, as I recall. And what happened is the IRS eventually assessed what's called the trust fund recovery penalty against him. So what that means is, in a payroll tax case, the IRS can assess about 65% of the total liability that the business owes against human beings, against responsible people. And typically it's typically one guy, But it doesn't have to be one guy. In this particular case, there was 3 responsible people, the 2 shareholders and my client. And it was really unfair because he had not made those decisions not to pay the payroll taxes. He was just sort of in the middle, and the IRS wouldn't agree to let him out. And so he ended up owing, I don't know, it was a lot of money. He ended up owing $500,000 or $600,000 to the IRS. And this was about 10 years ago. It must have been about 2006-ish. And we represented him back in that during that time frame. Well, after that was assessed against him, he went ahead and we waited because we didn't enter into an installment agreement right away because we knew it was going to be a lot of money. Eventually, he ended up in an installment agreement of about $1,200 or $1,300 a month, which was a lot of money, but he was a pretty good earner. And so he was in this installment agreement for years and years. And one of the things that I really like about this particular client is he was a man of his word. If he said he was going to do something, he always did it. And I think that that's really admirable. But in this particular case, through some glitch, I can't recall exactly why, the IRS actually terminated his installment agreement for some really silly technicality. And so he got back in touch with me, and we started talking about what the situation was, and he asked me what he should do. Well, remember, there's a 10-year statute of limitations for the payment of tax. When he got back with me to talk about what he should do, there was only 2 years left on the statute of limitations. So if we had contacted the IRS was going to ask for $3,000 or $4,000 or $5,000 a month, right? And he'd been paying like $1,300 a month for years and years and years. And in his opinion, that's what he agreed to do, so that's what he was going to do. So we decided that he was just going to keep paying $1,300 a month and try to keep the IRS off his back. And we didn't know if that would work for sure, but we thought it probably would. And so that's what he did. And then ultimately we just ran out the clock. So the clock just ran out like last week, and he saved $401,000 that he didn't have to pay to the IRS because the clock basically just ran out on the IRS.
And you were responsible.
Well, I was partly responsible. I got to help him, and it was really interesting. Yesterday, I actually found out, and literally within 5 minutes of finding out, I had him on the phone, and we were hooting and hollering and celebrating, and it's really going to change his life. He's not been able to buy a house because he had a.
I was going to say I can sell him a house for that amount of money.
he had over a $300,000 tax lien on him for over 10 years, and so his credit's good, except for he has a $300,000 tax lien on him. So he's pretty excited.
But it's gone now, right?
It's
like
going to
you're
be
wiping
gone.
it out?
Yeah, we're going to have to take, the IRS has been a little bit less diligent about releasing liens automatically lately. And so there's another step I have to take.
You have to hunt them down and kill them to remove the tax lien.
I wish we had more time so you could decipher this debt clock as far as the tax part of it.
Yeah, maybe next time. It's pretty interesting. The things that jump out is, the
revenue per citizen and revenue per taxpayer.
Yeah, revenue per citizen is $10,156. Revenue per taxpayer is $27,617. What does that tell you? There's something like, 3 citizens who aren't paying taxes for every citizen who is paying taxes.
We are streaming this, by the way, on the IRS Solution Attorney page. You'll get to see Mr. Darrin Mish. Hi, Darrin, and the USDebtClock.org, as well as Pat George back there and myself. We'll be back same time, same place next week. Tampa Home Talk is pre-recorded tomorrow with Emerald Home Inspection, just so you know, in case Pat tries to mess with me. Thanks for listening this week.
For today, we're out. Thanks.